Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver up and down and all around, going nowhere fast. A very bearish market right now, but that does not mean things cannot change for the better. Now, this is an article from Seeking Alpha talking about how silver had a fake sell-off for the price to set new lows for 2020, but it does snap back. Technical indicators are neutral. Gold says silver is heading higher and the long-term chart remains bullish. So the link to this article will be in the description. But with that said, let's jump into it. So silver has been trading on either side of the $18 per ounce level in 2020. So far this year, it's been from $17.28 to $18.89, with the midpoint at $18.08. Silver was at the $17.66 level on Friday, February 7th, below the middle of the range, after settling for $17.92 on December 31st, 2019. The price was slightly lower so far in 2020. So silver traded to its high in 2020 on January 8th when gold peaked at $1,613 as tensions between U.S. and Iran reached a boiling point. The low came on January 29th as risk-off conditions on the back of the coronavirus in China took the prices most markets across all asset classes lower. So they're saying the coronavirus didn't only affect precious metals, but it also affects stock markets and everything else under the sun. So while silver sits below the $18 per ounce level, gold has exhibited strength. So the yellow metals moved from around $1,520 at the end of the year to around $1,570 at the end of last week, or 3.3% higher. The bull market in gold is likely to support the price of silver over the coming weeks and months. If gold is going to appreciably be higher, silver should follow and may eventually take the lead. Shares of silver mining companies often outperform the price action in the metal on the upside. The junior mining companies have the potential to offer a leveraged risk position compared to both the metal and the leading miners. The ETF MG Prime Junior Silver ETF SILJ holds shares of leading junior silver mining companies. So this is where the article talks about this fake sell-off, and it set prices for a new low for 2020. So recently, we have seen wider trading ranges in the silver futures market. On January 29th, the price of the precious metal fell to a new low for 2020. Now, I'm going to enlarge this chart so you can see right here. Things are very, very staggerish. There's not much going on, but that doesn't mean it's not necessarily bad. If you think about it, this is actually good because of all the other things that's been happening. Stock market setting record highs, dollar index higher, coronavirus attacking prices. But it has been standing its ground. It's been building stability. So as the daily chart of the COMEX Silver Futures highlights, the price fell to a new low from $17.28 from over the $18 level on January 29th. So the selling on January 28th created the widest daily price range in futures arena since January 8th, the day that tensions between the U.S. and Iran reached a boiling point that sent gold over the $1,600 per ounce level for the first time since 2013. So silver snaps back. Technical indicators are below neutral. In the aftermath of the January Fed meeting, silver bounced back above the $18 level before it moved below to what has been so far a higher low. The U.S. Central Bank left the short-term Fed funds rate unchanged at the 1.5% level to 1.75% level. Moreover, the Fed told markets they do not anticipate any changes in the monetary policy over the coming months. The central bank will go to great lengths to avoid any changes to rates during 2020, as it is an election year in the U.S. Now it brings up some very, very good points. The 2020 presidential election. That's going to shift things across the board from the political, economical, and industrial side of it. Even the U.S.-China trade negotiations could be a huge player in what happens to silver's price. So it goes on to say the price momentum and the relative strength indicators on the daily chart fell below neutral readings after the recent price action. The wider daily price ranges lifted daily historical volatility from below 16% to the 25.5% level. Open interest, the total number of open long-short positions in the silver futures markets, declined from 238,000 contracts on January 27th to below 225,000 contracts on February 6th. So increased volatility chased some of the market participants holding risk positions from the market. The price of silver recovered to a lower high of $18.12 on February 3rd, but the price heated lower headed lower once again as trading was around the $17.46 level per ounce on February 5th. So with technical metrics below neutral territory, silver continues to use the $18 per ounce level as a pivotal point. So gold says silver is heading higher. And usually you can see this because let's check this chart out. Usually what gold is doing, and this is the gold quarterly, what gold is doing, silver follows suit shortly afterward. Gold is silver's big brother. So if gold starts to go higher, within the next couple weeks, silver does. And right now, that's what it's showing. Gold broke out to the upside in June 2019 as the Fed told market interest rates would decline. The price of the yellow metal moved above its level of critical technical resistance at the July 2016 high of $1,377 per ounce and continued to post gains. By early September, gold reached its highest price of 2020 at $1,559. In early 2020, as fears over tensions in the Middle East rose, the yellow metal rose to a higher high of $1,613 on January 8th. So the long-term quarterly gold chart shows that the yellow metal posted gains over the past 5 consecutive quarters. So a closing price above the $1,520 level would extend the streak to 6 quarters. At the end of last week, the yellow metal was trading around $1,566 per ounce, and the price momentum and relative strength metrics are in overbought territory. However, the technical indicators can sit in overbought conditions for a prolonged period as they did from 2004 through 2011. So the trend in the gold markets and its long-term relationship with silver suggests that both metals are likely to move higher highs over the coming months and perhaps years. So at the same time, the longer-term picture of the silver market points to higher prices. So man, this is very bullish. This is really good news, and especially since it's been holding its own, rally could be setting up. The long-term chart remains bullish. After trading at a high of $49.82 in 2011, the price of silver fell to a low in late 2015 to $13.63 per ounce. While silver spent decades below the $10 level, it has not traded below that price since the final month of 2008. In 2019, silver followed gold higher, but it could not rise above its July 2016 high at $21.09 an ounce. So, however the price action remains constructive, the metal looks poised for future gains. So the quarterly chart COMEX for silver futures shows a pattern of higher lows since December 2015. Open interest has been increasing with the price, which tends to be a technical validation of a bullish trend in futures markets. Price momentum and relative strength indicators are at just above neutral readings, but both turned higher in 2019. Quarterly historical volatility at 11.39% at the beginning of February was at its lowest level since way back in 2003. While the daily trading ranges have increased over the recent trading sessions, the long-term picture of the silver market remains tightly coiled spring with low volatility and the potential to snap at any time. So, silver is like a ticking time bomb, just waiting to explode. What do you guys think about this? What do you think all of these indicators are showing from gold's momentum, from the dollar index, from stuff happening in the economy? What do you think this is going to be taking silver? Where are the prices headed? Is this very bullish, or do you think prices will be staying lower? So this is talking about a dip could be a buying opportunity, which I always talk about. There's a lot of potential. I'm going to skip to the main point. So meanwhile, the moves to around $50 level in 1980 and again in 2011 are the reasons why speculators and trend-following traders tend to keep an eye on the silver market. If silver eventually follows gold and breaks above its 2016 high and level of critical resistance above that $21 level, we could see a flood of buying that will shift the market sentiment dramatically. With gold in a long-term bullish trend, the odds continue to favor higher highs in the silver market, and that's extremely relevant and good point. This is all pointing towards higher prices. I mean, I don't know if you are bullish on silver or not, if you're losing your patience, what the case is, when you got in the markets, but that does definitely affect your perspective on the markets. If you got into silver at $15, then yes, $21 would be great. If you got in at $21, then that's only breaking even for you. So you can see on when you got into the markets or when you started buying silver could highly reflect upon what you think or how you think prices are doing at that current time. So anyways, like I said, the link to this article will be in the description. I'm going to try to keep this video at a timely manner, so I'm not going to finish the rest, but if you guys want to check it out, the link will be in the description. I thought this was a very good article that shares a lot of insight and a lot of sharing the potential of where silver prices could go. I really am curious on what you guys think prices are going to be doing as well. But with that said, I'm going to wrap this video up. Thank you guys so much for tuning in. This was Silver Slayer. Make sure to smash the like button. I'll see you guys soon. Peace.